All right. Good morning, everybody. Welcome to this week's Marketcast call. As always, if you wouldn't mind just chiming in, let me know you can hear me all right. That would be fantastic. Always pays to double check there. All right. Good morning to all of you as well, then. Okay. We'll give about a minute or so. Hop on board. Obviously, market, so it's going to make a move to the upside here, which definitely isn't what we expected. Yeah. Good morning to all of you. Yep. Yep. Obviously, for weeks we've been just referencing reasons to be cautious. Not any kind of doom and gloom or crazy stuff. Just a few things here and there. And from the start of last week into Wednesday, we kind of started to see a little bit of weakness there. Looked like that may have been it, right? We made it down to our old shelf here at the 57.65 area. Got a little bounce. Friday at one point looked like all right. Same old stuff, right? Just like here, we broke above, bounced on the breakout point. So same thing here. Looked like that's what we were doing. And then we kind of gave it all back and ended up pretty close to the low of the day. So, came into the week thinking lower, based on everything. And yet here we are, at least gonna open a little bit higher. So we'll see how that unfolds. I don't think I'd get too gung ho about a higher move unless we can kind of take out this shelf up top here. And this is kind of around 58.75, very, very short term. So if we can kind of get above that and hold above it, then yeah, definitely looks like the S&P is really trying to get to this, I would think, psychological kind of 6K. But certainly would be surprised if we sold off first. Seemed to make a little bit of sense too, seasonally, knowing what we know about October and the second half of October. And, I got the election coming up next week. So wouldn't be uncommon to see a little bit of a, hey, let's get out of this thing and see where we want to be come Wednesday morning or something, or Thursday or Friday, whenever how that goes. So we'll see. I wouldn't. I'm not going to make too much of much. You pan out a little bit. Obviously, we do what we do mostly short term. So, but if you pan out at the end of the day, you're talking about a market on Friday that was just a few ticks away from hitting a new intraday all time high, you know? So, you want to keep that in perspective for now. And, we've looked around. Everybody has their thing, right, with the market. My thing is more of a keeping it simple as possible, focus on the things that truly matter. And 99.9% of that doesn't show up on this chart, right? So, good position size, risk management, risk reward trades, discipline, plan, all that kind of stuff. That being said, you got to have some, the analogy I use, golf clubs, play the game. You got to have some set of clubs. Okay. My advice to everybody is you don't need every club on the planet to have a good round of golf, right? So you don't need 872 different indicators. And if you have the basic core fundamentals of the game down, it really won't matter what set of clubs you use, right? Again, you have to have some set. So for what we look at, what I look at, haven't really seen a whole lot that would lead me to believe there's any impending doom here. Now, that being said, sometimes we, go through some pretty good sell-offs where there's just no real warning given, right? So there doesn't have to be. Market's allowed to do whatever it wants. But like say, for example, back here, right? We had a pretty nice little warning sign in the form of this daily momentum divergence. Eventually price confirmed it breaking out of the bottom, right? So we get those warning signs. As of right now, there isn't really a whole lot. I mean, we looked at the weekly last week. I mean, it's kind of definitely weaker momentum than say back here and even here to that extent. So one could look at this and say we're losing some gas here on the upside. I think we looked at it the monthly. Now, it really kind of just depends on how you look at something like this, but um, I can't hear. But you kind of look at it. There isn't really a whole lot to be worried about here. But that's where we kind of focus. When we see these bigger ticket weekly or monthly momentum divergences, that's why we pay attention to them. They're relatively reliable, right? So they don't fail too terribly often, which would make sense, right? When you look at a daily momentum divergence, okay, pretty reliable, but you could have, it doesn't take as much data to form a daily as it does a weekly. It doesn't take as much time, right? So we haven't seen anything like that, not yet. But just to repeat, that doesn't mean there couldn't be one. I think one thing that to me stands out just as again, I don't get make things too terribly complicated here. I let the nerds deal with that. At the end of the day, I'd be somewhat curious about the fact that the VIX keeps taking steps up even as we hit new highs. Right? New highs, this is where the VIX was. We hit more new highs, but the VIX is higher. Just recently we hit more new highs, but the VIX is higher. Okay, and one of my favorite examples of that, there's many, but my favorite is always going back to the financial crisis. And gosh, we got to go back. Oh, we could have done 15, I guess. All right, but if we go back, you'll kind of see. Just give you an example. All right, so here's where the VIX was. It's daily. This is in 2007. All right, some may remember, when the market sold off, it was March of 2007. Nice little spike in the VIX. That was when I believe that's when the two Bear Stearns hedge funds made all the news that imploded. Right, but the market went on to hit new highs, and look where the VIX was. Right, for a few months. And then we had I think it was July into August type of, it was roughly a 10 percenter. And here goes the VIX. But then we went on to hit more new highs. Okay, the final high in the S&P was in October. But look what the S&P had done, right? Had taken these steps up. each time it hit these new highs. So kind of like a fuse was lit, like a little ticking time bomb, all throughout the rest of 2007, going into 2008, and then of course the whole kind of Lehman Brothers event. So I find this kind of curious. Maybe it means nothing, but you see here again, we started here, took a step up for a couple months. Here we're hitting new highs, right? Maybe it's nothing, but that stands out to me a little bit as curious. Now that being said, I mean, I would think again, you saw what happened. That this went on market. Back then we were taking those steps up for a while. You know, that first low was way back in like February, and then market peaked in October, and so 8 months later. So if you look at here, being July, if we use that as the same runway, then 8 months we could be next year, have a nice good end of year like we're quote supposed to. But like I said, who knows? Maybe it means nothing. NYC selling off every day last week. So, and no real surprise, right? We've been talking about seasonally not a bullish time of year historically, election cycle, right? So no real surprises. Dow selling off every day. And we got our friend the Nasdaq actually outperforming everybody. So it was underperforming everybody when they hit highs, but now it's outperforming everybody when they're all falling. So again, interesting. The last index to hit a high in 2007 was the Nasdaq. The S&P peaked in October, and Nasdaq went on to hit one more high in November, if I remember correctly. So, but anyway, like I said, panning out. Hey, bull market. Uh, maybe we do decline this week. Maybe we sell into this, keep pulling back. That would be absolutely 100% in line with what we'd expect seasonally, and then we expect to pick up our skirts and get going November, December, in the next year. You know? So we're going to go with that until the market gives us a reason to think otherwise. Do I use more than one monitor? No, no. Most traders don't. Nowadays, there are just as many traders just using their phone. You know, I always kind of find it interesting. You know, and so many people losing a ton of money, but they have like three or four screens. I'm like, well, you're kind of proving my point. They had like zero screens back in the day, and yet they were able to profit. If you can trade, you don't need multiple screens. They're not gonna help you go from non-successful to successful. In other words, again, using the same golf club analogy. If you suck at golf, you suck at golf. Doesn't matter how many clubs I give you. I can give you 3 bags of clubs. It's not gonna make a difference, is it? But if you know how to play the game, you're gonna succeed whether you had 1 bag, two, three. If you had these clubs, or those clubs, right? So it's not really relevant. Again, it's kind of like the whole psychology behind day trading, right? Everybody coming into the trading world tends to want to be a day trader, even though it's the lowest probability trading that there is. But there's a lot of things in markets that psychologically and emotionally have an effect. And one of them is this idea that day trading is cool, right? Because we have those, visions of back in the .com and those heydays, and just kind of has a aura about it, right? Similar to why I don't have red and green candles, right? There's a psychology and emotion around those candles. And so back when we were doing more coaching, I saw that happen. Not only was I taught that, but then I saw it happen. And I would say hundreds, if not thousands of times. Wait a minute. I can't buy that. The candle's red. Bad. Ooh, scary. Right? Well, Do you want to buy if a stock pulls back to a key level of support? Well, yeah. Um, is that possible if it's not red? What? Uh, uh, right. Right. But you see how that's kind of, and it goes both ways. Big green candle. Ah, FOMO, got to get in. Anybody not jumped in on a big juicy green candle just to have it drop right after you get in? Right. So there's a lot of like psychology and emotion and things that seem to make sense to us or things that hurt us that we don't realize. One of my favorites that I always like to bring up, well, Christian, you never get hurt taking a profit. You know what I mean? Actually, no, the retail trading public almost always hurts themselves taking profits because they use, hey, you never get hurt taking a profit as an excuse to take smaller profits and not let them run and not follow your plan and not let them reach targets. So actually, it's the exact opposite of what you just said, right? So there's a lot of things like that. So my opinion is always this: hey, if you got 10 different indicators on your screen and you're making money, my advice to you would use those 10 indicators. Just don't forget, there are people out there that are just using price, the indicator, and they're making money too. You're not better because you're using 5 or 10 or 20. But if it's good for what you're doing and you're succeeding doing it, cool, right? I play disc golf with all my friends, and those discs have different speeds. I only throw high speeds or nines. The other guys throw fives, fours, threes. I don't. Yet I'm better than all of them. What I do works for me, right? I got to have some discs to throw, but I've never thrown a four-speed disc on the course in my life, right? So, but whatever works. Same thing. If it's helping you to have multiple screens or monitors for whatever you want, cool. But I can tell you right now, 80+% of all the trades and or alerts that I send out, I'm doing it on my phone, right? So again, if you can trade, you don't need monitors. Now, if you're a day trader, well, that might be a little different, sure, because you're kind of that's exactly why. But again, that's why day trading is so hard because you're sitting there watching it. It generates in a lot of emotion. Difficult. So the biggest reason why day trading is actually harder than any other trading. So do what works for you, you know. All right. So that's the market oil. I haven't looked at oil in a while. Doesn't look good. Not great. So let's pan this thing out and see why I got this big juicy green line here. Okay. So this is why. Right through this area. Right around 67 bucks a barrel seems to show up that area as a support shelf. And then there's a line back here I used to have. So I mean, definitely looks like if we kind of look this out, certainly looks like a descending triangle type setup, right? Which, contrary to popular belief, guys that have studied this way more than I, that there technically isn't really a bias whether it's a descending or ascending. But it sure looks like, yeah, I've never mapped that out myself, but that's what I was told. Well, look at how perfect somebody is. Our technical analysis is voodoo. Right through this area there, maybe. Trying to see where I got it. So, as you can see, whoa, where'd you go? Screen left me. There it is. So, how about that, Marshall? What do you think? Good morning, Turbo. Certainly looks like we got ourselves a big old juicy descending triangle, right? Cha cha cha. Pretty big one. Let's make it dark. There you go. I can see it, right? I got this little shelf here. And by the way, don't get me wrong. I'm not knocking anybody who uses multiple monitors or a bazillion indicators of some kind. But I just the irony of it is most 99% of those people that are talking about that are losing money, right? I do 80% of what I do on a phone or one monitor. I only look at all I'm looking at, price and price patterns. And I have 5 trade services that I operate, all successful. So my point is simply that don't be duped into thinking that somehow you're going to better yourself. If you know how to trade, you don't need multiple monitors. If you know how to trade, you don't need a zillion indicators, right? It's because monitors and indicators, right? I think the golf analogy fits best. But this is what I'd be watching, Marshall, right through there. Get a nice solid takeout of here. I would think you're going to fall further than here, but you can kind of see we've tested this. That'd be your next level down. So call it 62. And then you take that out, and it sure looks like a lot of open air to 50. But it looks like that. All right. So that's that. You're welcome. Do I record the ask or bid prices? Neither. We record the prices that were actually actual prices. A bid is just as what one is offering and what another one is, offering, right? So simply put, for the services, no matter what happens to my trades, if we have a quote, like say for example, a sell limit at 5, if those options traded at 5, we're out. So it's just the fill prices. Agree, risk management is better than many. Yeah, it's better than all screens. There's just screens are not relevant. Again, remember, 80 years ago, investors and traders were making money in markets. They didn't have any screens, right? Anybody ever read that reminiscence of a stock operator where they're going to bucket shops and all that kind of stuff? Remember when people were handwriting charts? So it's not my opinion, it's just a fact. You don't need screens at all. In one way or another, we got to know what's going on. But I'm just saying, if you know how to trade versus if you don't, and having coached for 17 years, that's what I see. What kind of people want to know? Okay, which indicators do you use? How many monitors do you have? Which software do you use? None of it's relevant to successful trading. Absolute zero. That's not my opinion. That is a fact. If you know how to trade, it doesn't matter if you're on Thinkorswim or if you're on whatever interactive brokers. It's not possible for that to make a difference. If you know how to trade, right? If you told me to trade with a 5-day moving average, a 20-day moving average, I could do it, right? Switching up from what I do. If you told me to trade off Bollinger Bands, not too terribly difficult. Told me to trade off some Fibonacci retracements, you want to trade off some VWAP, none of this stuff is hard. We could trade off that too. You're not succeeding or failing necessarily because the ones you do or do not use, right? You're succeeding and failing because you understand trading. Keeping losses small, letting profits run, don't blow up your account, blah, blah, blah. Plans, following them. Okay. And so if you have that, that's what I mean with that golf analogy. It doesn't matter what clubs I hand Rory McIlroy. He's gonna beat my ass every time, didn't he? Oh, but if I go buy the best clubs on the planet and I have 3 bags of clubs and they're the state of the art clubs, that somehow is gonna make me beat him? No. If I hand him some old wooden sticks from the 60s, is he going to lose to me? No. Right. So that's how the retail public, us out here, get duped. You know. Again, I don't want to make it sound like I'm saying that stuff is bad. Just saying if you have the fundamental core concepts and pillars of trading down, it's all mute points. Do what you like, and you're going to succeed. I heard current administration borrowed, used fiscal stimulus $500 billion last 30 days to prop up seasonal weakness. I would go probably not. Probably not. Exactly, Sal. Didn't you say that once before? It's not the wand, it's the magician. Or as I like to say, it's not the plane, it's the pilot. Right? You love some Top Gun Maverick. Yeah, I doubt it. But you hear that stuff over years and years and decades. It's not the Fed, it's somebody else, some conspiracy theory of someone holding up markets. I would just say in 2022, if it was easy to hold up markets, why are we dropping 30%? You know, if you could hold up markets, why are we dropping whatever it was 30% COVID? Why do we have, a 10 and a 20% correction in 2018? I would say that holding up markets is a little bit probably harder than that sounds. But plus, we've been selling off. It's a light one, but and let's also keep in mind the markets skirted seasonal weakness back in February and March too, not just recently. We were kind of positioning ourselves back then. Where we go? We thought, where we go? Right about in here. Because seasonally, this is typically a rougher time of year. July usually isn't, but we did drop. Right. So if somebody could prop up the market, like why are we dropping here then? Was the prop guy off that day? Or that week? That being said, doesn't affect me one way or the other if it is or is not. But markets will always go through drops, and they always have, always will. Right. Last I checked in 2007, 8, and 9, everybody and their grandma was trying to prop these markets up, and they couldn't do it. Right. Lost what, 54% on the S&P. But the good news is for us as traders, again, who cares? As traders, we got to trade what we see. So it doesn't matter to me if the market wants to go up, market wants to go down for whatever reason it is or is not. Doesn't change. As I like to say it, the why, who cares? Doesn't change that it is. So in other words, hey, we break through this little level of resistance, probably going higher. My problem is not to figure out the why, even if there was one. Right? Again, another thing that hurts the trading public, thinking that there's always a reason why the market does every last little thing it does, and then trying to make sense of it. Right? Good luck with that. I always like to say, have fun with that. The end of the day doesn't change that it is. We're watching a rising wedge, which is bearish. We break out of the bottom of this thing. Sure seems to point towards potentially lower prices. Hey, look, we broke. Let's buy some puts. Hey, we did all right. You know what I mean? Why did it drop? I don't care. I don't know. Go ask somebody. Doesn't change that it happened. You can't argue with it, right? So just that reminds me of like the turtle traders. If those of you have read that, one of the things the turtle traders were not allowed to do, right? They weren't allowed to be affected by outside noise like news and things of that nature because it would do those exact things. Okay, a lot of times the stuff's made up anyway. Anybody can make a bullish and bearish case on anything, right? So it depends. If everybody's bullish on something nowadays, well, I'm just going to write something bearish on it, right? Write a bearish article on Nvidia. It's going to get a shit ton of clicks, isn't it? Nvidia drop? What in the hell are you talking about? I'll read that. That's nonsense. Nvidia is the greatest thing ever, right? Because that kind of stuff. And I believe there was an excerpt about that in uh, The Complete Turtle Trader. Somebody that had written an article on sugar or something. And when he was interviewed later, he admitted, I just made it all up. Just took the stuff everybody else was saying and made a case. So I don't focus too much on the why because it's not relevant. It doesn't change that it is. And if you follow the market along, notice how easy, by easy, I just mean to know what to do. It doesn't make trading easy. But you can see all these little lines I have. These things were put here for reasons, right? It seemed like they're important. Okay. So like this little line here, okay, clear shelf that was created by the S&P. 1, 2, 3, 4, 5, right? Very important. Break it, probably going lower, but guess what? Break back above it, probably going higher. Get long. Okay, cool. You're probably pretty happy about it. Create a support shelf. Think we're going higher. Whoops. We broke down instead. Might want to buy some puts. Looks like we might be going lower. Oh, check it out. And look where we found support. Same spot that we had before. Remember, this line was here way before these two tests. Okay. So notice how I Fed, Schmed, administration, administration. I don't care. It doesn't change that it is. And that's assuming that there isn't even is an actual reason. But again, that's that fallacy that every day there's a reason why the market does what it does. And isn't it always interesting too that most of the time when people are getting all infatuated with reasons, it's because there was a drop. Okay, that's that inherent bias we have. Why did we drop today? What in the heck is wrong with the market? Oh, so there's nothing wrong if we go higher by 2%, but there's something wrong if we drop at 2%. Why? Says who? So that's that kind of just straight up, just non-biased, trade what you see mantra. Or as I like to say, market doesn't care doesn't care what you think, certainly doesn't care how you feel. So trade what you see. You know. Snow? Let's take a look at snow. Yes, we can. Snow looks like a breakout? I assume you're not talking about snow looking like a breakout. I would say if so, I would say I do not see anything breaking anything here, nor would I want to do anything with it. I want to guess you mean something else, not snow. Yeah, I don't see where we be in breakout territory. But let's look at some other stocks and some things. Let's see. Tesla having itself a party last week. Our target for quite some time back here as well was to get back to 270. Finally made it. So now it's only, not only is it 52 high, but if you go back a couple more months, it's also another high at 270 there. I don't know how much faith I have in this trend line or not, but at the end of the day, if you take out 270, you're taking it out as well. But looking pretty good after those 2 days after that earnings. Carvana taking out 200. We were watching that. Apple's been interesting here. Friday and hit that 233 again and stalled, but looks like we're going to try to get back above it today. So if we can hold, maybe run higher, but things been a little dicey. I don't know if Nvidia knows what in the hell it's doing. Um, you look right here, interesting price, but right around 144 ish. Seems to be kind of like a little mini breakout point, I guess you could say. Right, so just right around that close, call it 144. So you take that out, that should open the door to 150. Pretty boring stock nowadays, most of the time compared to the way it used to be. So, and got a nice, good, I think, decent opening. Yet for some reason this thing's not up. So who knows what it's doing? S&P up a half point. Nasdaq not looking as good as it did. All righty then. Our buddy ASML falling here. Keep an eye on ASML. We had the false breakdown here, but if this thing failed to hold 700 again, I'd be looking at puts. We made money here, but we kind of held on. We could have made a lot had we just closed this thing because we were both short and long. So once we fell here, our shorts were looking great. But you're thinking, hey, I just broke 700, probably going lower. And we did bring our calls down, so we profited when this happened. But coulda, woulda, shoulda. Problem is, if you close those puts, then we're a break even if we keep falling. It's always easier to say after the fact, right? Keep an eye on Microsoft. Keeps failing at that 430. I thought Meta looked kind of sketchy on Friday, but so did the market. Never mind. We're getting back above 575. So I would think a hold of 575 would lead to some good things, but definitely you might want to watch the 600 up top. Who else were we watching last week? A lot of things looked bearish on Friday, but maybe not. DHI sure looks like a little head and shoulders there. Got confirmed, but so right through there. Doink, doink, doink. But who else? Looks like CRM might finally be. It's been trying to get above that little 294-ish area for a while. Can't seem to do it. Maybe today's the day. Maybe. It's kind of funny. Fed lowers rates and yields rise. Small little momentum divergence down here, a positive one. So maybe a rally coming. Yeah, I don't remember seeing a whole lot at the end of last week anyway. MSTR keeps doing what MSTR do. To the moon, Alice. So yeah, came into the week thinking lower, but BDN. But as of right now, we'll see. I don't think this rally necessarily changes that, but maybe we'll see. Not necessarily what we kind of like to look at. Kind of a little bit smaller of a mover. A little nasty little week last week. I mean, it sure looks like if it doesn't hold this 520, you're going to get to five at minimum. But yeah, I'm not getting too gung ho about this rally here. Um, we'll see. See if it has some legs. Again, Friday looked relatively convincing, and seasonally, we've seen a little bit of weakness here in the back half of October. So I wouldn't be surprised if it continued. But again, we'll see. You get above that little 58.65, 58.75. I'm sorry, that we talked about, and that should mean that yeah, more to come. Otherwise, I'm gonna let everybody run, and I'll see you next week. Everybody on all my calls, I'll see you all week long. Otherwise, everybody, good luck in the trade.